All right, ladies and gentlemen, it is time that we talk about Bitcoin. Now, as most of you know, I actually have not done many videos on crypto on this channel. I've talked about it in passing, I've done some analysis in the past, but it is becoming a recurring topic I get a lot of questions about, especially at this current time because of the state of Bitcoin. So I'm going to talk a little bit about it, historically speaking, what kind of causes asset classes to drop like this, and at the end of the video, I'll kind of explain my point of view and what I think you should do moving forward to kind of capitalize on the situation. Now, the first thing is first, let's understand the current state of Bitcoin. So within the last month, we are down about 23%. Within 6 months, about 41%. And then year to date, we are negative. And then over the last year, we are negative as well. And 28%, don't get me wrong, is a very significant value. Now, this compared to something like a larger scale ETF is very out of the ordinary. Things like VOO, VGT, these large scale funds don't typically drop this much, and it is very rare if they do. But with that being said, most of you watching this hopefully understand that crypto is very volatile compared to other asset classes like the stock market. And with that being notified, a lot of institutional traders are very likely taking their profits after a large-scale rally. Many know this as the crypto cycles and the way that they move, and they use the word cycles because at the end of the day, when crypto tends to make a rally, we will see a pullback, and then another rally, and then an expected pullback. This is kind of caused because, number one, there's a lot of what people would call whales or institutional investment within this price. And I'm sure at certain levels or points of profit, they begin taking profits off the table. And that does tend to cause a sell-off. And that sell-off tends to increase the sentiment on Bitcoin, and that leads to what we call panic selling by the majority of people that are involved in that asset class. So what this kind of looks like is when Bitcoin reaches a very high peak and then they begin selling off, investors out there notice that Bitcoin is dropping. There is a lot of volatility in the asset, a lot of fear even, because most people don't really understand what is valued, because most people don't really understand what gives you its valuation. So when that occurs, a lot of people begin selling off their positions as well in fear that the crash or the pullback will go significantly deeper. Now, this is becoming more important because we're actually seeing the previous year low get broken in 2025, and that seems to be a point where, once again, a lot of people may have had orders below it, and they're starting to realize that, yes, we are significantly dropping past the recession or the pullback that we've seen in the past. So we'll recap there. Number one, in the main reason is people are very likely taking profits. And then when that happens, the sentiment shifts on an asset class, and that tends to cause panic selling or large scale selling from the psychological or emotional masses of investors out there. Now, number two, and this one is very important and really dives a little bit more into the macroeconomic situation of the United States. But that refers to the fact that we are seeing interest rates hold very stable here in the US. And when that happens, it typically shows a lot of strength in the US dollar. And when that occurs, it's very unlikely that people go and look for these more volatile or risky assets in a sense, because things like Bitcoin or gold and other asset classes, typically what people are going to do in a situation like that when the US dollar is showing significant strength, they may start removing money from more risky asset classes and delegating that into more safe haven income streams. This could be something like bonds, it could be something like ETF portfolios in the stock market. It could even be something like gold, which has been a historic safe haven currency for most people. That very likely And that idea is very likely what has caused the opposite effect on something like gold that has been a historic safe haven currency for most. We have seen an absolute ridiculous gain on gold in the last year, 71%. And a lot of that comes with our current administration and the fact that the stock market has been very volatile. A lot of people will remove their, in a state with a strengthening US dollar, interest rates holding steady and high, and an administration that is causing a very volatile stock market, a lot of people may begin removing their capital from areas like that. A lot of people may begin removing their capital and putting it into more safe haven currencies of something like gold or even silver. And that does take a lot away from the more volatile and riskier currencies like Bitcoin or the other crypto or the rest of the crypto market. So as we talked about, number one is more of that profit-taking idea, and as Bitcoin grew, people are taking profits. Number two is that macro pressure we talked about, where people begin moving out of speculative, where in a volatile situation, where in a volatile economy like we're having currently, people tend to move away from speculative or risky asset classes and move into more safe haven currencies. But the last thing I want to talk about here, and I do want to tie it a little bit into my expectation for Bitcoin, we're going to pull up our TradingView chart here and talk a little bit about the current state of Bitcoin. So here we are on the current chart. Now, you guys know we are huge on technical analysis here. Technical analysis is merely theory, and it's generally based on a few rooted concepts. But for those of you that have been watching my channel for a long time, we understand that concepts like liquidity and volume are the main fundamental factors that move price action. If we remove this recession that we're currently seeing, and someone were to ask me where the majority of liquidity rests on Bitcoin, the answer would be this low right here. And that low is significant because it is the overall yearly low. In 2025, the lowest point that we reached was this low right here, back in April. And this is a very important piece. When a significant low like this is formed and price breaks higher and continues rallying upward, there are significant amounts of institutions, even these quote-unquote whales that you may think of in Bitcoin. All of them have a lot of liquidity below this low. It's the lowest point of the year, and as most people know, those smart and informed investors invest when a currency is low. So there was a significant amount of buy orders here. So there was a significant amount of buy orders placed here, and then everybody knows that a stop loss is actually a sell position for a buy order. If you don't understand that, I definitely would recommend getting a better understanding of liquidity, maybe watch some of my past videos. But if I'm buying a currency here and my stop loss is going to be below the yearly low, if price were to reach that point, it means that I would sell off the initial buy position I had, and that is why a stop loss for a buy position is a sell order. What this means is that a ridiculous amount of sell positions lie below that yearly low. Anybody that bought after that very likely has their stop loss, or everybody that bought beyond that very likely has a stop loss or some sort of risk-averse strategy where they are going to sell off a large amount if we reach that overall yearly low. Even if it just means a small percent, like 20% of their account once we reach this low, that in accumulation adds up significantly, and a lot of large-scale institutions will actually manage their investments in a similar way. When they buy an asset class, they always have stop losses in place. They will never let the capital go completely to zero. So that means there is a ton of sell orders below this low. Now, Bitcoin has since reached below that low, and as we know, if you want to place a significant amount of buy positions in a market, you need to be coupled on the other side of the market with a significant amount of sell positions. They have to be equal to each other, and that is what represents the idea of liquidity. So fundamentally speaking, if I wanted to go and place a $1 trillion Bitcoin order at this current second, there would need to be $1 trillion worth of sell orders at the same exact time available in the market for me to go and place that position. And the only way that something like that would occur is if a large scale amount of sell orders were piled below a certain low or above a certain high, are accumulating below a certain low. Now that Bitcoin has reached below that, we have seen a large-scale panic sell. My honest expectation is that it is a better time than ever to purchase Bitcoin. You're essentially buying it on discount. I think anywhere below this low and above this high is a fantastic zone to get some great ROI if we do return to all-time highs. But more importantly speaking, at the end of the day, someone in finance and with a good understanding of economics like myself realizes that Bitcoin doesn't really provide value on the back end. It is a risky asset for that reason. So let me explain here. Essentially what's going on with Bitcoin price action is that everybody is buying it based on the hype. Everybody buys it based on the hype of the crypto market. But fundamentally speaking, you are expecting that the guy next to you or the people around you are going to pay more for it than you did, and that is essentially what creates the liquidity in Bitcoin. I can only make money on this asset class if when it goes over 130,000 and reaches an all-time high, I can get some guy next to me who thinks that's a great buy position and I can take my profits. I did the same thing when Bitcoin reached this all-time high here, and it's very likely why once it reached that all-time high, a bunch of people began taking profits and we saw this very low and slow pullback. Because there's a good mix of people. When people hear that Bitcoin reached its all-time high, many like myself are selling off a portion of our profits and essentially putting that and pocketing it away, while the other people who are watching the news and hearing about this think that it's a fantastic time to buy because they're getting news of the hype, so they begin buying in, and that kind of split decision in the market is what causes a low and slow pullback like this. A lot of liquidity is being generated and used, and then eventually we see another expansion. I think it is a great time to buy Bitcoin. I don't think you should fearfully sell out of the markets. If you would like, take some profits off the table or take some losses as you want. If you would like, you can always scale out and take some losses. I prefer to buy in dollar cost average on different asset classes as time goes on. But that alone is my 2 cents on Bitcoin here. I think we are in a fantastic position to go and reach the all-time high. I went ahead and drew it a little bit neater on here for you guys, but I really do think we are in a great position to buy Bitcoin now. I think with the big seller sentiment that we are having come into the markets, it means there is plenty of liquidity for informed investors to begin buying this asset class and hopefully gaining that ROI on it. Once again, this is not financial advice, and you guys understand I am a very risk-averse investor. I prefer to always dollar cost average. I keep a comfortable amount in the crypto markets where I'm fully willing to lose every dime I've put into it, because I will be honest, there is not much value behind the actual currency itself. However, in my opinion, the ROI that is available there is so great that it is worth having a small amount of capital invested into it. Because I understand that when it does go on a bullish run, I have been able to outpace many different things like my foreign exchange accounts. I've been able to outpace many different asset classes like gold, my foreign exchange accounts, and even my stock market portfolios. So that ROI is very appealing. I hope you guys got some information from this video. I hope it's a little more open-minded and I really didn't show any type of bias for or against it. I like to just inform you guys with some facts and some historical evidence. If you enjoyed this type of video, give a like on it. I can maybe make some more content on crypto or at least some technical analysis in the long term for different asset classes. But thank you all again for watching. I appreciate it, and I will see you all in next week's video.